Good morning. My name is Miguel Gonzalez, and I'm a certified retirement counselor with over 20 years of experience helping clients in retirement income planning, overseeing investment of funds, and designing retirement plans. This week, let's talk about everything you need to know about 529 plans. Planning for your child's education is likely a top priority for you. You want to ensure that they have access to the best education possible without worrying about the high cost of tuition. This is where 529 plans come into play. But with so much information, understanding these plans and how they benefit you is essential. Let's start with the basics. What is a 529 plan? Well, a 529 plan is a tax advantage savings plan designed specifically for education expenses. Congress voted to create 529 plans back in 1996, and now every state offers at least one type of 529 plan. There are two types of 529 plans: prepaid tuition and education savings. The main difference between the two is how they're invested and distributed. Let's talk about prepaid. Prepaid tuition plans allow you to purchase college credits at today's prices, which you can later use towards tuition at participating colleges. Now, education savings. Education savings plans allow you to contribute money towards a college savings account for future education expenses. They can offer various investment options such as stocks, bonds, and mutual funds. One of the main advantages of 529 plans for affluent families is the tax benefits they offer. Contributions to the plan are not federally taxed, and some states also offer tax deductions or credits for contributions. All earnings grow tax-free, and withdrawals from qualified education expenses are tax-free. Another benefit is the flexibility of the plans. Unlike other educational savings accounts, 529 plans have no income limitations, so even high-income families can contribute. You can also change the plan's beneficiary if your child does not attend college or receives a full scholarship. Furthermore, these plans can be used for both undergraduate and graduate education expenses, giving you more options. But what are the 529 plan limitations? Before investing in a 529 plan, it's essential to understand its limitations. These plans have contribution limits, and any amount exceeding the limit may be subject to gift taxes. Additionally, withdrawals not used for qualified education expenses may be subject to income tax and a 10% penalty. Another important consideration is the impact of a 529 plan on financial aid eligibility. While it is an asset owned by the parent, it affects the expected family contribution (EFC) formula and may impact the child's financial aid. Well, what about 529 plans as a wealth transfer strategy? By using a 529 plan as a wealth transfer strategy, families can save for future education expenses and help ensure that a financially independent future for their descendants. It is essential to consult with financial and tax professionals before utilizing a 529 plan as part of a comprehensive wealth transfer strategy. What about parent contributions? One of the benefits of a 529 plan is that there are no annual contribution limit, and parents can contribute consistently over time, maximizing the account's growth potential. What about the grandparents' contribution? Well, in 2024, a grandparent can gift up to $18,000 per year or $36,000 per couple per beneficiary without incurring gift taxes. By contributing directly to the 529 plan, grandparents can transfer wealth to their grandchildren without incurring taxes when receiving the gift. What happens to unused 529 plan monies? Well, if a child or grandchild has the remaining 529 plan monies, they can be transferred to a Roth IRA for retirement savings or emergency expenses. A Roth IRA is another tax advantage retirement account offering more flexibility and a comprehensive range of investment options. However, some IRS rules impact how much can be transferred from the 529 plan to a Roth IRA without penalties. Number one, the 529 plan must be open for at least 15 years. A $35,000 lifetime limit on 529 transfer applies, and the 529 plan contributions and earnings on those contributions made in the last 5 years cannot be transferred to a Roth IRA, and the transfer must be direct or custodian to custodian. 529 plans may also be appropriate for affluent families to save for their children's education expenses and as a wealth transfer strategy. However, weighing the pros and the cons and consulting with financial and tax professionals before establishing a 529 plan or using it as a wealth transfer strategy is crucial. Once again, this is Miguel Gonzalez with Cortburg Retirement Advisors. Please take a moment to click the like icon, and don't forget to also subscribe to my YouTube channel to receive a weekly video podcast every Monday morning. Thank you for watching, and I will see you all next week.